How do you think about what's Bitcoin today?
It really looks like there is at least some element of Bitcoin being a safe haven. Like if you're like some really rich person somewhere and you look at the world and it's chaotic, it kind of looks to me like actually maybe people are genuinely viewing it as a haven.
Not a dividend. It's a tale of two clans.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate option.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we got Robert, the crypto connoisseur and czar of Superstate.
Good afternoon.
And we got Tarun, the gigabrain and grand poobah at Gauntlet.
Yo.
And joining us today, we've got special guest Joe Weisenthal, co-host of the Odd Lots podcast.
Thanks for having me. Psyched to be here.
Yeah, that voice, I would say, it's like embedded so deep in my brain.
It's on our podcast now.
Yeah, exactly.
I got a voice recognized on the street today.
Really?
I was walking down the street, I was talking to a friend, and someone just like overheard, like, I love them. It was very funny.
Wait, is Bloomberg's hiring by characteristic voices? Like you and Matt
Is it a
Levine
blind
have
hiring
just
process?
like crazy.
That's the thing, like Matt Levine like really has a voice for podcasts. And, I just feel like, I have a face for podcasts and a voice for silent radio, but yeah, it's,
Wow.
I guess it's distinct enough.
It is very distinctive.
It's funny when I go out to San Francisco and I because people are like, oh, I've never heard your voice at 1x speed before. It's like, all you guys are like so optimizing and stuff like that.
That is actually correct.
Yeah.
I've also never heard your voice at 1x speed, but I like it. I feel like it's even better at 1x speed. So we're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So we're in a very weird macro moment, which is part of the reason why we wanted to bring you onto the show.
Thank you.
Is that we're in one of these moments where everything is correlated. Correlations are going to 1. And one of the interesting things we've been seeing in the market lately is although alts have sold off, it's been a really rough market for almost everything, but Bitcoin has started to decouple from everything else going on in the wider market. So there are moments when Bitcoin acts like a tech stock, and there are moments when Bitcoin starts to act like gold. And this seems to be one of the moments where Bitcoin has changed its mind about what it is. So initially in the early innings of the macro turmoil, it was really acting more like tech. And now it's increasingly correlated to gold. Gold has done very, very well this year. It's rallied to all-time highs. Gold is up 28% year to date. Bitcoin is almost flat. It's down like 3%, whereas Ether is down like 50+%.
Nobody wants to hold the Ether.
It's just, even Solana is down massively this year. Solana is down like 25+%. So what you're seeing is just like Bitcoin is doing its own thing. It's zagging while everyone else is zigging. How do you think about, so you had a famous tweet that you posted earlier this year about Bitcoin being 3 tech stocks in a trench coat. How do you think about what's Bitcoin today?
It really looks like there is at least some element of Bitcoin being a safe haven. Like if you're like some really rich person somewhere and you look at the world and it's chaotic, it kind of looks to me like actually maybe people are genuinely viewing it as a haven, and people have talked about it forever and playing such a role. Digital gold, but I rarely have I ever seen much evidence of the price like actually trading in that way. I kind of think it might be now. I suspect that there are a lot of like people out there in the world with money, and when they think, wow, things look really chaotic these days, I'm like genuinely never been more uncertain in my entire life about how the global economy or the financial system is going to work. I think they're probably more like, I want to have a little bit in Bitcoin specifically.
And Bitcoin's up almost 10% over the last couple of days, which is like kind of one of the best performing assets you could be holding right now in this kind of environment. So it does feel like there's sort of an affinity trade with gold going on. And it reminds me a little bit of what happened during the Ukraine war. When the invasion of Ukraine began, Bitcoin started rallying like crazy at the same time that most of the stuff was selling off. And again, it sort of seems like, and the same thing happened during the financial crisis, is that moments of crisis seem to be
which financial?
Yeah, wait, what?
Yeah.
The banking crisis. The banking crisis.
like
23, March 2022.
Wow,
For
2023. You're washing away the remnants of the financial crisis.
Sorry,
this is crazy.
It was born during the actual great financial crisis. I meant the banking crisis. But it's like, it seems to be that most of the time Bitcoin is like 3 tech stocks in a trench coat. But then in moments of crisis, it like pulls the trench coat off. It's like, oh, I'm actually digital gold. I don't know. How do you guys think about it?
Well, it was born when the chancellor was on the brink of the second power.
That's true. That's true.
I think right now it definitely is benefiting from uncertainty.
Mhm.
I think I've read, and this could be unsubstantiated, just what I was reading on Twitter, that a lot of the flows were coming from offshore, that they weren't
Mhm.
flows from the US. People were measuring like the price performance of Bitcoin during, US hours, European hours, and Asian hours. And it was like, no, it's not happening during US hours. For the most part, it was happening when US markets were closed, pointing to potentially foreign capital being scared of the US dollar, right? And moving assets out of US financial assets and into anything else that could hold its value. Gold, obviously, and Bitcoin, et cetera. But like right now, it seems like it's just the anti-dollar trade playing out. And that's what's making people move into Bitcoin. And that could reverse very quickly as well. But it seems like it is tracking gold, and that is the narrative behind it. Anecdotally, like one of my best friends told me, he's like, oh yeah, my wife, who has never owned crypto, sold her tech stocks and bought Bitcoin because tech is too risky, but Bitcoin is not.
Is she American?
Yeah.
Yeah.
And she decided that now is
Yeah,
the time
she's
to say,
decided now.
No, I mean, I agree. I think I was sending this chart around, like Matt from Van Eck posted around busy gold outperformance being like 4 times higher in Asia sessions than US sessions. So it is kind of supporting this idea that, hey, this is Asia buying gold, de-dollarization. But I think also if you're in Asia, it's like you maybe do have concerns about, hey, if you're in China, keeping funds onshore, real sort of custody risk. And so it's understandable why maybe, hey, Bitcoin is at least a way to sort of diversify your diversification instead of just buying gold, maybe buying a little bit of Bitcoin too.
I remember there were some noises early when the trade war began about countries wanting to pull their gold from the US.
Oh yeah.
And so maybe there's some connection there.
So I've thought about this a lot, and gold is really the original negative yielding asset, because if you have gold, what does that actually mean to own gold? Either you're paying someone for safekeeping, in which it's literally a negative yield, or you have to hold it literally in your own safe, which means you run some risk of theft or something like that. So it's like, kind of like losing your own keys to your
And you're getting
but you
inflated.
only have you only have so much capacity to buy gold. Like, do you trust anyone right now? Like, do you really? I mean, I think it's a crisis of trust, and so you don't really if you actually want to own gold, you can't really trust anyone. But there's a limit to how much you want to have on your person. And so I do think Bitcoin sort of plays this interesting thing where it's you can own it, and you might be scared to hold your own keys, and I think a lot of people are.
Same exact situation as owning physical.
Yeah, but there's no you don't have to worry about the shipment. You don't have to worry about the size of your safe or something. So it has some interesting properties from a safe haven perspective that even gold might not have in a moment like this.
There's also that, I think, thread right before tariffs are going live around people trying to import gold from the UK into the US to get in before the tariffs. Because ultimately, even if you're buying a gold ETF, it's going to be physically custodied somewhere.
That's right.
There's tariffs on gold delivery.
There was fear. The gold was not tariffed, but there was fear that gold could be tariffed.
And so there was an imbalance in the market pricing between US and UK markets, sort of baking in anticipation of tariffs.
Or the probability.
Yeah.
It was something like all the cargo, excess cargo capacity on commercial flights was sold
insane.
for gold capacity.
Well,
So
if
there
you-
was some crazy statistic.
If
for,
you look at the
a couple of days,
If you look at the Atlanta Fed has a GDP now tracker, and mathematically export subtract from GDP, and they actually had to publish, the Atlanta Fed, a GDP tracker X gold, because they realized that gold imports were skewing their the calculations
Their
so
imports
much.
were too high.
Dude, basically,
Into the
they were
US?
saying there was a massive recession because of the imports, but these weren't they're monetary imports, so it's different. But they were being picked up as goods imports or something like that. So they actually had to publish a GDP tracker X gold imports because they were skewing the way that they calculated where GDP was tracking.
Here's my favorite gold fact of the moment. You ready?
yeah.
For the first time, the weight of gold for a certain dollar quantity is less than the physical paper stacks of $100 bills. So it is actually lighter to hold gold than it is stacks and stacks and stacks
because
of
the
physical
dollar
paper
is
currency.
weakened so much.
Because the dollar is weakened so much. So for the
wow.
first time, you should not be keeping dollar bills under your mattress or in a suitcase trying to travel with them. It's actually now lighter to actually be carrying.
I don't even care if that's true.
Yeah.
Like that's just such a good line. I don't actually care.
It's
if
very
that's true.
evocative. It's a very evocative image.
So actually, you've made me think about this one business that relies so much on non-tariffed gold that I hadn't thought about, which is Freeports. Like, how are Freeports doing right now? Like, wouldn't a country just seize the Freeport?
Wait, what are Freeports?
Have you seen Tenet?
No.
Freeports are where people keep art, gold, a lot of like,
they're like dark
think of them
warehouses.
as like custodians that don't charge you tax, and people build data centers in Freeports now.
Yes.
But Freeports are, in my mind, the business most affected by all the protectionism. Like, they're the ones where like the host country has the most reason to seize or cut off electricity or do something. And a lot of their business is built off this like gold storage stuff. Like the Singapore Freeport is like one of the world's top 3 gold storage units in the world.
So how does it work in practice? I don't want to detour us, but let's say there's a Freeport in Singapore.
No, this is good stuff.
Yeah, this is good stuff. I'm not an expert on this. My only knowledge comes from watching Tenet, which is a great film.
Okay.
So there's a Freeport. It's in Singapore. Are they saying like nothing is taxed going in? Like Singapore
it's like
chooses
an
not
airport
to tax
where it's
it?
like if you're in transit and so you haven't landed in Singapore, and so therefore you can custody it without sort of going through
without paying taxes.
Yeah, it's like an opportunity zone in the US.
Yeah.
It's like the same.
It's like international waters.
But you're not actually like in transit. You're leaving it at the Freeport for like
you're leaving. You
years.
can't take it out of there. Yeah.
Atosa Abrahamian
So it's like a duty-free shop.
has a
Yes,
great book
it is
all about this. I'm blanking on the name, but the amazing book, I'm blanking, by Atosa Abrahamian, you should check out. She talks all about this world of free ports, and it's like, absolutely fascinating. Like Geneva's like a whole city built upon the free port business and all that stuff.
Well, the reason I bring up Bitcoin is like a way of doing free ports without needing.
Well, crypto solves this, right?
Yeah,
you don't need free
solves
ports with Bitcoin. Yeah.
But Freeport's number of assets in dollar terms is crazy.
Not bad.
Like every Picasso is a Freeport.
Do you have any assets in a Freeport?
No, but I've just like.
Would you admit if you did?
No, yes. But I have a friend who's an artist who all her art, Sarah, who all her art she sells to people in Freeport. So she has to like go deliver to Freeport. So she talks about this whole like delivery process thing is like crazy.
In the movies, don't the art collectors like keep the forgery in the Freeport and then bring the real one to their this is in the movies, and then bring it home? It's like, oh, this is like the real Picasso. And like, the
NFT solved
forgery
this,
is,
by the way. NFT solved this.
Yeah. But anyway, I'm kind of curious, like somehow maybe the Bitcoin narrative should be like decentralized Freeport.
That's a good one. That's a good one. Decentralized Freeports.
All right. It requires a lot of setup in order to explain
the type
payoff,
of person who would be
is
worried and buy Bitcoin the moment and like flip out of tech stocks into Bitcoin and like had enough money would probably be able to get that.
So I've told this story on the podcast before, but when I was in high school, I got a tour of the gold vaults at the New York Fed. And what's really cool about those is like all the different countries have a locker at the New York Fed, and like the IMF has a locker. And you think about that, which is like, and I've really thought about this a lot lately. Think about the implicit trust that like America has built up over the years, such that all of these countries and international institutions are told, yeah, cool, you can hold our gold. Yeah, that's fine. I have it in a locker down in the basement of one of your banks at the New York Fed. Like, you should kind of maybe appreciate what we've built up trust-wise with the entire rest of the world when it comes to that.
Well, there's an economy of scale there, right? So like it's easy to theoretically move something from one locker to the next when they're next to each other.
That's right.
So like the IMF can move gold to another country.
That's
or
right.
Vice versa. Whereas if everyone's holding their own gold, it's actually unbelievably cumbersome to fly.
That's right.
around
That's
the
right.
world. So there's reasons why it should
there should be kind of centralized.
Yeah.
That makes a lot of sense.
Yeah.
But one thing I will actually say, if you go to GIC, the Singapore Sovereign Wealth Fund's office, they have their story of their founding. And the story of their founding is like, as soon as the US moved off the gold standard, Singapore was like, we're going to like have this fund just go buy as much gold as possible.
Oh, interesting.
And they have like the transcripts of how they did it, which was like flying to Switzerland and like finding OTC brokers. And they have like all the like time. If you go to the office, they have like, it's almost like a museum of like the artifacts and how hard it was. Yeah, basically it's a trade log of how hard it was to buy gold if you were a country looking to like basically build up your initial stash. So I kind of think people must be thinking someone must be the Singapore right now, right? Like, and the question to me is like, who is that? Who's the one who might be using Bitcoin? as the kind of
well, the one advantage of using Bitcoin is that you never get these distortions in like trade numbers because Bitcoin just instantly comes in and out of the country, and it's like even I mean I don't know if you move assets custodied by Coinbase custody into Binance or Kobo or something, does that show up? Like when does that finally show up into like GDP numbers or something? You know,
I don't think it shows up in.
Yeah, it certainly doesn't right now.
No, it's like it's a good question.
But in principle, at someday, there's no reason why it shouldn't. But
I actually disagree because GDP is trying to measure like economic output.
Right. Obviously, you're
not
subtracting,
financial.
And we use some very simple mathematical shortcuts to be able to measure it, right? But fundamentally, moving Bitcoin in or out of the world doesn't actually contribute.
Yeah, it's not productive.
You're telling me miners' costs don't. I'm kidding.
No, I mean the actual Bitcoin mined could or should be in GDP,
right?
But like if I move Bitcoin between two countries,
I don't know what it was about the way the Atlanta Fed was doing about it, that they were picking up gold flows in their data. They were. I don't really know why that was, and they realized that shouldn't have been included.
Yeah. Okay, so switching gears a little bit.
Yeah.
We've been talking about how Bitcoin's decoupling, and a lot of crypto Twitter is right now pretty despondent. I mean, maybe the last couple days it's started to get a little bit better, but they're pretty despondent about the fact that Bitcoin has been crushing it and everything else has been getting crushed.
Well, I'm just going to say, this is very funny to me because I see all this, like, no offense, chest thumping from crypto people. And they're like, see, we're decoupling from TradFi. And I'm like, who is we? Because all of you have been pumping all these other coins for the last 5 years. And I could go to like Coinbase.com and there's a million other coins along there with Bitcoin.
Really is,
so it's like, who is this we that you're talking about?
It's a different subset of the tribe. It's a genuinely different subset of the tribe.
Oh, we're decoupling. It's like, no, you're really not. One slice of, anyway, that's my little
which, to be clear, increasingly is now like 64% slice.
So it is a big slice.
Bitcoin dominance has crested to a local high. One of the other meta narratives going on right now in crypto Twitter is this sense that VC investment, of course, which we're representatives in our own way, has slumped alongside what's going on broader in macro. There's been less dollars sent out the door, and recently I got into a tiff online with Gwart, the big sardonic guy who's been on the show before. Him basically saying that he thinks all VC investments are going to zero. And that basically there's just these legions of tokens that are all worthless. And it seems like now that's kind of the zeitgeist, is that, Bitcoin worked, maybe Coinbase, maybe stablecoins, but like besides that, it's all kind of fucked. Now,
I would buy any venture portfolio for a little bit more than zero.
Secondary.
If any LPs out there, like it's going to zero, I'll pay you, 1 cent.
Yeah. I mean, I'm curious again. So from your perspective as a looking into the circus, what's your perspective on all this drama playing out in crypto land?
I mean, look, I'll be honest. I've yet to see really any economic value generated, like real. And I've actually been surprised because, like, as pessimistic as I am about a lot of this stuff, like, I am aware that NFTs exist. I am aware that some of these other projects exist. So I'm actually like surprised that, as far as I can tell, if I look at like Ethereum, the most dominant of the non-Bitcoin coins, I'm surprised they're, it's like relative to Bitcoin, it's like at the 2018 lows. And I've been really, I'm like, has it really not gained anything marginally from all of this activity? And I've almost been surprised that it hasn't like picked up accrued a little bit relative success.
We talk about this on the show quite often.
Maybe too much. But so, okay, let's sharpen that claim. So you're saying, look, I'm surprised how little of economic value has been created. What do you feel like was supposedly created that feels like bullshit? What are the unfulfilled promises?
Here's the thing. Someone might have like sent me an NFT once. There might be some random like test wallet I have, or someone like sent me some. But like, look, I never got it. No, but I get, other people claim it's like, oh, this makes sense. But I would figure like enough people are, quote, into NFTs that I would have figured there'd be some sort of like monetary value that was like evident in the price of the tokens upon which these NFTs trade, that would like show up in some chart somewhere. Even if like I don't get it, which is fine, like, like I'm a boomer, so like of course I don't get it. But like I would figure like, okay, enough people are like kind of into them and like having a collection that I would have figured there would at least be some evidence that is like, oh yeah, like over time, like Ethereum has accrued some value, or Solana, which I guess has outperformed Ethereum over the years, but like it's hard to see, right? It's kind of hard to see.
Right. So you're measuring the value creation as accruing to the L1 on which the value is based.
Well,
right?
this is like an interesting question to my mind because I kind of have been like stablecoin pilled a little bit.
Good.
We've had, I am, yeah, and I know maybe we'll talk about that
because
more.
you did the Eurodollar series?
Well, like we've had
yeah.
Austin Campbell on the podcast, and like he has done a good job of convincing me that actually stablecoins solve for some real problems in payments that exist that is unlikely to be solved for by merely upgrading existing legacy financial software. Would
you say stablecoins don't count though as crypto? Because
no. I'm not going to say that. What I am surprised by is that the actual stablecoin usage that exists on like Ethereum, Solana, Tron, etc., does not seem to have produced more value for the holders of the L1 tokens upon which the stable coins move. So that like I am kind of like stablecoin pilled, and yet it doesn't even seem like the ETH holders.
So it almost sounds like your argument is if you guys are so valuable, why isn't your price higher?
Kind of.
Well, what if
why haven't the L1s?
I think this is an Ethereum specific problem because I agree, but I think you were talking about Solana, talking about Tron, and if you look at all the other EVM chains that have stablecoins that have done well, like in aggregate, those are actually doing pretty well compared to their 2018. Solana was around 2018. But I think Ethereum does suffer from kind of value leakage, where I think if you could, capture the value in EVM, I think that would have done obviously quite well since 2018. The problem is like Ethereum's product strategy has been to basically fragment itself, have these alt L1s that are EVM compatible, have these L2s. And I think the theory was that would then eventually sort of roll back into value for the L1. And that just has not really played out. Even though I think also maybe I was kind of, maybe didn't pick this up initially, you're kind of distinguishing like the price and the market price and that being sort of a signaling mechanism versus some kind of abstract like utils kind of concept of economic value.
Right.
If you take an abstract economic value, the sort of like consumer surplus that stablecoins create could be massive. There could be like trillions of dollars of economic benefit.
I would describe what Ethereum did as, imagine when Amazon moved from first party delivery to affiliate and you could sell products on Amazon. Ethereum did that, except it didn't charge a fee. It said, hey,
it didn't charge rent.
It didn't charge any, basically virtually zero.
There's no tariff.
There's no tariff.
Tremendous consumer surplus.
Could they have done it such that there would be a tariff? Like, was there an alternate roadmap?
There's an alternative world where they could have.
Justin Son of Tron actually proposed the Ethereum tariff, the L2 plan.
But even before that, they talked about it a long time ago, decided not to, and then only now is it kind of being revisited. I think they just didn't want to be like a lot of the other L1s that were like built that in, like the Polkadots of the world, where it was like built into.
Well, they were too commercial. They were so overly aggressively commercial that they made activity extinct.
Like backwards land with respect to charging rent when really
charging rent when there was nothing.
Yeah, exactly. It's like the direction of payments was the opposite everywhere else.
But I'm saying like I think that type of stuff scared Ethereum people into being like, no. The only way to be neutral is to charge nothing.
I don't think that's the right story. I think the story was that they just weren't thinking about it.
No, I think they did talk about it.
I think it was very simple, which was just that everybody in Ethereum felt like they were winning.
Yeah.
And that it just wasn't, it's like, you can do basically extremely low taxes when everything's growing like crazy. And you just don't need to think about it, right? Like having the optimal rate of taxation to maximize the amount of rent you're extracting, like optimizing the point of the Laffer curve, is something you only have to do when you're a mature economy, right? Before that, you're just growing, and all you care about is growth. So it's the same thing with like a tech company, right? Tech companies, they don't worry about exactly how many fees can the market bear.
I think the difference is when they had the first choice of thinking about this, they're like, MEV is so high that we don't really like it's growing, and like we have this alternative revenue that's very almost like variable interest rate that's growing so fast that we don't need to charge. And then they didn't realize that would get internalized by the vendors. So like,
so when you say charge, you mean like have a floor price on blob storage?
Yeah, or other execution fees, etc. Like
just raise fees beyond the market mechanism.
Exactly.
Okay.
But I mean, like if we're going back to stable coins, if I want to send $1 of value to Tom, for the most part, aren't I just always going to choose the lowest fee chain? I mean, like
no. Okay, no, you might do the one that has the most integration across the ecosystem.
Okay, that makes
So like it's possible that one blockchain is like, oh, it's supported on these 12 exchanges and these 40 custodians and these 90 wallets, and it's like, okay, well that's the most adopted one. even if it's more expensive.
Like, why would I, like, Solana's a transaction on Solana is a lot cheaper than Ethereum, right?
Yes.
Why would I ever, if we're just like,
not now.
Because we both have to have Solana wallets or be customers of platforms that do it. Right?
Well, so I'll give you another example, which is more like the repo market or bond market, which is like you might stay on a chain where the yields are higher, even if the fees are higher, because when you're not transacting, you're holding the baseline yield in different protocols, and you're only removing it from yield when you're doing a transfer. And those might have higher activity because there's more yield, right? So you might be willing to do this trade-off.
Okay, I see.
And I think maybe to answer your question too, I mean, Ethereum's product roadmap has been to scale through L2s, right? So the L2s are very, very cheap, comparable to Solana. And they're like, well, then the L2s will aggregate all the transactions, send it back to Ethereum. That will be an expensive transaction, but we sort of have economies of scale and it kind of gets aggregated over all the people who are using these L2s. And I think, frankly, that was like kind of a novel theory. I don't think anyone kind of did the math of like, okay, in aggregate, how much volume do you have to do in order for this to actually like kind of play out? And frankly, I think we still, as an industry, have a kind of poor understanding of price discovery for these assets. Like people always clown on Bitcoin for like, oh, there's not enough economic security and the halving. And it's like, yeah, I actually don't think that is like any driver of the price. Like actually the lesson you should be getting is like, there is something driving the price that is not any of these factors. And like, that's what you should be looking at. Not like I have some novel theory and then I'm going to like develop some formula and that's going to be how the price results. And I think Ethereum kind of also came at it from that way of like, how do I get transaction value? How do I use that to discover the price? I'm like, actually, Bitcoin is a great counterexample of how that doesn't matter.
But I completely agree. And actually, this is a question for you guys. Like, there is notionally a PE ratio for Ethereum, right? No one ever talks about
it. Not for Bitcoin.
Not for Bitcoin. I'm not talking about Bitcoin.
Well, there is for Bitcoin, but it's abysmal, so no one talks about it.
But
it doesn't accrue.
It doesn't accrue to the chain.
The chain it accrues to miners.
It accrues to miners.
Sure.
But for Ethereum, there is no, like, you could actually. But does anyone ever talk about that? Like, I never see that.
Okay, so Ethereum can be net burning ether. Right.
Okay.
Outside of the money that the validators make, right? Ethereum, the chain, can be inflationary or deflationary depending on transaction volume, right? And fees. And so that PE ratio can go negative or positive. And there have been times where it's deflationary. And so it's like, oh my God, then we can start measuring the sort of PE ratio in air quotes.
So actually, I don't think it's the right way to understand it. I think like if you own ETH, you have the right to be able to stake it.
Yes.
Yeah, so it's a little bit like, if you have $1, you can go get the overnight rate at the Fed, right? But like you don't have to. You can choose to just have it in dollars if you're an idiot. And like the fact that like those people are getting inflated, people who are just owning ETH, is irrelevant to the economic value of the asset in principle, right? Okay, so you own some ETH, you could stake it. If you stake it, by definition, you are not getting inflated. You are inflating the non-stakers, right? And so relative to the non-stakers, you are always gaining more ownership over the network. And the network itself is burning some fees. So the overall pie is increasing even more relative to the amount that the non-stakers are getting inflated away.
So your argument assumes though that there's like no arbitrage. Like every time there's a burn, like the price goes up to compensate for the market cap. And it doesn't really do that.
It doesn't do that, obviously, because like there's other
I'm just saying,
much
like,
predominating factors.
That's what makes empirical PEs kind of weird.
To your point, I mean, there are DeFi governance tokens that have some sort of buyback and burn mechanism baked in.
MKR.
MKR, Aave now, where those are just very clearly comparable to like stock buybacks. And people do calculate PE asset ratios for those. Frankly, though, again, I'm like, you can look at the market and like if you...
There's no evidence that they matter.
Yes, I don't think there's a very, very strong correlation or at all.
It depends on the asset.
It's almost like your token price is anti-correlated to your PE ratio.
Yeah, well, I think...
No, that's definitely not true.
If it exists, no one wants to buy your token. That's like what it seems.
Well,
this is
Hold on. I don't think this is the right way to read the market.
The PE ratio defender has logged on.
No. No, it's more that it's the same thing with tech startups, right? So like an AI company starts earning revenue and then all of a sudden like its next round is much more modest than the previous round. Why does that happen? That doesn't happen because, well, your PE ratio is inversely correlated with your stock price. It's that there's actually a collapsing of the wave function that happens when you start collecting revenue. Before you collect revenue, no one knows.
Right. Silicon Valley, the TV show, summed this up best, actually.
But crypto is kind of in the middle of that, right? It's not quite the liquid market and not quite the full, like, oh, I need a next round based on my current market.
I think it's actually very similar, is that once you start monetizing in crypto, the market starts to really understand, okay, so this is no longer a power law distribution.
To paraphrase Joe, what is the net present value of the discounted cash flows of Story Protocol right now.
Well, Story Protocol,
Mr. P.
Well,
right
first of all,
now.
I don't know how Story Protocol monetizes or if it monetizes.
Can I ask you guys a question? I'm just going to use this as like random things that I've wondered about.
Let's go.
Perfect.
Yeah. Is anyone using, like, for real, like, be honest with me. Like, is
We may not be able to be honest.
Yeah, okay. Is anyone using like distributed video graphics? Is anyone using Helium for real? Is anyone using like these like, is there a real consumption base of these like DPIN, whatever, things like that? Distributed cloud storage, or like, oh, this is a good solution for like my storage. Like, just give it to me straight.
Tom, you take this one.
Yeah, I would say mostly no. I would say mostly DPIN has really struggled to find traction. There are little pockets here and there, and there's always like some caveats or some sort of asterisks around them. But I would say by and large, DPIN as a category is either very early or it's not working. I think really what I think the past 5-6 years of crypto has shown is like financial applications are really the killer app. Even a lot of the social stuff I think has also really struggled. And so you need something. I mean, you have the whole sort
like,
of,
what is it? Render network. Like, that's the video one I was thinking.
well, that's a whole kind of
I mean, no. So the GPU marketplaces, the sort of data marketplaces, all this stuff, they've struggled.
Okay,
they are relatively small. If you go look at their tokens, their tokens reflect
usage,
that.
But sometimes their tokens do not reflect that.
No, I think
this
today,
is what I'm trying
if
to
you
get
look at this, like
at.
the market has really internalized this, right? So like all of these tokens are down massively from their highs, which basically says that like the market no longer is giving you infinite rope to tell the story.
Yeah.
Right.
Okay.
So I think the market has rationalized to some degree. The other thing I think that is also worth recognizing that is not always obvious in crypto is that market caps themselves can be deceptive. Like they're not one for one with companies. So when something says like, oh, it has a 400 million fully diluted valuation, that can really mean almost anything depending on what comprises those pieces of fully diluted market cap. Right. So it's not like a company where fully diluted market cap means like, well, all this equity is going to hit the market at some point in the near future. And it's guaranteed to hit the market, right? In a fully diluted valuation, a lot of this quote unquote market cap may never hit the market, in which case, it's more complicated picture.
Yeah. And not just sort of issued or sort of shares outstanding, but also to frankly price. Like you really have to look at like liquidity and the quality of the sources and like all this stuff might be valued like something that should be trading on NASDAQ, but it really is more like a pink sheet, stock. And so it's kind of hard to know. All
right. So I feel under attack. But I want to give you this is a perfect here. This is perfect. This is absolutely perfect. So DPIN you feel like is bullshit.
No, I asked you guys.
NFTs, no. You're like
he's just totally asking questions.
We're here to bring out the inherent
Tell us
drama.
How you really feel, Haseeb.
in bringing a Bloomberg podcast person onto the show. Okay. So NFTs are bullshit. DPIN is bullshit.
No, he said the NFTs don't accrue value to
all I said is, from what I could
somebody
tell,
said you an NFT once, and okay.
You guys said they were BS. Keep going.
Yeah, okay. What else would you say is like, all right, you crypto bros keep telling me that XYZ is happening, and I'm not seeing it.
Well, I mean, the other thing, I'm kind of a Worldcoin bull. I don't know it.
You're a Worldcoin bull. Tell us more.
I think the orb is super cool, and I actually think that...
Have you scanned?
I'm scanned, yeah.
Okay.
And you don't own any Worldcoin? Did you get scammed?
They might have like said, I probably had to download a thing. There's probably like one Worldcoin in there. But I actually think that in the world of AI and deepfakes and all that stuff, it might actually be that we need to have all of our irises scanned. Like, I kind of find that compelling. Like, it's like, and like maybe they should be kept on chain, and that's like every human needs a unique identifier, and Social Security's numbers are obviously, it's just the US, so it's a terrible system for obvious reasons, as everyone knows. Like, I'm kind of Worldcoin pilled. I'm like kind of orb-pilled. Like, I don't know where it's going, but like, I kind of get it. No, for real.
Tom, why? Explain why you're laughing.
No, I think it's very funny that it's like the one project you latch on. But I also think Worldcoin is cool. I think the tech is very cool. I think they have optics issues and branding issues, but those are maybe fixable.
Yeah. Wait, so
optics issues.
What do you think about the creepiness factor of Worldcoin? That's like the most common
factor.
Yeah, it's weird as hell. But it's like, look,
it's like very Black Mirror.
The way it is, but look, the way I see it is that's already gone. Look, I mean, we carry like, a personal tracker around with us at all times.
Okay.
So I feel like that's long gone.
So you're like a Black Mirror maximalist. You're like, just bring it on.
I just think like it's over. Like the idea that we like have any like
it's over.
privacy or whatever is kind of over. So at least maybe I could at some point in the future prove that I am actually me. Like that's something. Like so I'm kind of a believer in that. But then the other thing like I've often wondered about in crypto that like seems like there could be a shred of potential, but I never really, is like sort of like messaging, social networking on chain, which intuitively, like if I really stretch my brain, it's like, oh, I could see it, or maybe like sharing, like sending a message through the I don't know. Like, is there anything there?
Why?
Like,
Why does it appeal to you?
well, I'll tell you why it appeals to me. The whole idea of like the internet communication being run by like 4 companies or whatever it is, like really does not sit well with me. Like I really don't like the topology of
So you're
the
an
modern...
anti-dystopian on the one hand.
Yeah, I mean, like how can it not sit? How can anyone really sit easy with the amount of power over communication?
But you want
that,
everyone's
like,
eyeballs to be in one.
Yeah, wait, hold on. Yeah,
Distributed
these two
in,
pictures feel immediately at odds with each
No,
other.
it's all right. It's like, but no one like owns those eyeballs. I mean, really, like,
Yes,
you
they
know,
do.
like maybe they do. But you know, it's like Elon Musk, Mark Zuckerberg, a few other people just have like an extraordinary amount of control over like the public square, and they can turn a dial on the topics that are allowed and what gets censored. And like, if I were to like lose one of my accounts, I would have like no real.
Where would you
recourse or
go
anything.
if you got banned from X?
If I got banned from X, God, I worry about that all the time. I don't know. We have an
But
outlaws
where are you a
Discord.
refugee? Like this is like a
I would
real
just
question.
hang out in my Discord. I would send emails to people again. You
You
know?
want to go to Threads? You'd go to Discord.
Oh, yeah.
But if there was a crypto chat, that's where you go. Is that
But
what
I
you're
want,
saying?
like, could we, like, the idea of like a genuinely like decentralized like blockchain version of some of these tools.
Like
that
Blue
we-
Sky is a little bit in
Yeah.
that vein. I mean, it's not blockchain
Yeah, but like,
per se.
why isn't there like, could there be a blockchain?
Wait, so why
I know
did you
there's-
wave away Blue Sky?
Well, I have an account there. The vibes are just so awful, and like,
Are they? I don't
Yeah,
have
so
to use Blue
miserable.
Sky.
It's
so
just
bored.
like everyone complaining all the
Yeah.
time. That's like
Okay.
it's like it's not fun.
when there's bad, you know, like people are real sickos for bad news there. So when the market's down, people get really excited because you know they really dislike.
Yeah.
Oh, I see.
You know, the politics are very
Blue
to the
Sky
left,
is
yeah.
very left
Yeah,
coded.
yeah. So like if like the
like-
stock market's down or like if Tesla shares are down, I'll post a chart there. I'll go nuts. 'Cause, you know, like, I really-
Yeah. I've never seen more announcements other than my Blue Sky for like attack a Tesla today.
Oh yeah, you know, it's
Like,
really. So
it's like all the anti-Musk.
my
stuff
Blue Sky
essentially.
followers are like way up since the market started going.
Really?
Yeah.
Really?
Oh yeah.
Okay.
Yeah.
That's,
How many do you have?
I have like 50,000 there.
That's pretty good.
That's pretty big.
But you're
for-
like intentionally putting bad news on
Well,
Blue
it's
Sky
actually
and
like-
good news
Yes.
on X?
No, I don't even. You know, the good news. I'm just saying like. There's a real market for bad news on Blue Sky. I'm just
Okay.
being,
All right,
but
all
there's
right.
been, you know, in the last few months, it's mostly
Yeah,
been down
Joe
arrows.
feeds that market.
Yeah.
Are you on
Yeah.
Farcaster? Are you casting?
No. What? So what's the deal? Like, is it
Decentralized.
This is what I'm wondering. Like,
What?
what is Farcaster? And like, could
Farcaster is the answer to, it's the
Yeah,
antidote
it's-
that you are claiming
and
you
are
want.
people using it?
Not really.
What?
Why?
It's pretty decent.
It's, I mean,
Okay, it's not a lot. It's like what, 50, 60K a day, something like that.
It's like your entire
And
follower
what is the
count is the
connection
data access.
between Farcaster and the chain? Like, how does it employ the chain?
So I think this is my personal bias. Farcaster basically uses the chain as a registry with a bunch of links that then link off to something off chain that actually hosts the content or hosts some sort of
Yeah.
version. So it's nice because you sort of get this like lookup, almost like a phone book of like, hey, where's everyone's content? But then it's all stitched together off chain, which makes more sense to me actually from an architecture perspective. Like
Mhm.
you don't need consensus for content. You need consensus
Yeah.
when it's scarcity. Like I can't be spending your money. You can't
Yeah.
be spending the money that I sent you twice. But for content, it's like, yeah, if I
Or
send a
your
message,
username.
yes,
Yeah.
it takes a while to sort of, relay around or eventually hit you. Or hey, but if someone doesn't want to see this, fine, that's fine. That can take place off chain, and that's gonna be way cheaper, easier to mediate. But the actual sort of logs and the actual sort of record happens on chain. And that's sort of the Farcaster
Yeah.
architecture, which I think makes the most sense of all this stuff.
See, the thing is, I actually have a lot of sympathy and towards like true like cypherpunk stuff, but a lot of it was just solved by signal.
WorldCoin is not.
I know it's not, but a lot of it was just solved by signal. This is like,
Are you saying Hegseth is proof that it was solved by signal?
I mean, look, in the end, like screenshots can never be. They're always screenshots. They're screenshots. But like, if I want to like communicate with someone in a way that truly does not run through like a centralized bottleneck, that's been solved without crypto.
Yeah, I mean, you can send a message
Yeah.
through the Ethereum blockchain that
Yeah.
is like truly censorship resistant, where like you can encode any message and like get
Yeah,
yourself out there. I mean, but
it's not worth it.
I mean, it could be worth it.
I don't know. Like, I mean, it just seems potentially like.
I think the
I would
problem
like a
with
more
social networks is the value of your message much later than when you push the
Oh,
message.
that's interesting.
But blockchains are all about paying up front.
Yeah.
And so I think that there's like this disconnect in that social posts gain value or lose value after they're posted.
Yeah.
Blockchain transactions or financial transactions where they're like kind of like known up front. And like I've never been able to reconcile that difference.
Well, I mean, there was all the ideas back in like the late 90s about charging for email to reduce spam, right? It was like, well, what if we put a 1 cent fee on every...
Hashcash was the foundational for Bitcoin.
That's
So
right.
like, don't dismiss it too much.
I mean,
I'm not dismissing.
I think paying per token in AI is like their spam prevention.
Yeah.
Not much. It's so cheap too cheap to meter.
I think maybe the kind of silver lining of the way I can see these two kind of fusing actually is crypto being basically a backdoor to creating a sort of public record, everyone's public-private key pair, and using that as sort of a way to actually build up that kind of network. Otherwise, everything gets done kind of piecemeal. Yeah, you and I can communicate on Signal, but that's gonna be separate from our iMessage key or your email or like whatever it is. This is like, hey, we actually have one big global database that people can actually use to have some
that is a Worldcoin bullish post that you just said.
Yeah, damn. I'm like, I'm telling myself.
It's not. No one really owns the Worldcoin. Like that is a chain, right? Like what is the? I thought.
No, I mean I agree with you. Like the data is encrypted and it's in such a way it can't be retrieved.
You can't replicate it without their device, though, and I think that's where.
That's
right. There's like a supply chain.
Aren't they open sourcing?
They are.
The hardware should be, but it's not yet.
Oh, it's not yet. Okay.
Yeah.
Well,
but so what strikes me the most about your impression of crypto, because I'd say among people who are in the traditional financial media, you're like at the very first percentile of knowledge about crypto in terms of your engagement with it. Obviously, you've been around it for a long time. And what strikes me is that like what seems to have most brainwormed for you of all the stories you've heard about crypto over the years is the very utopian vision that crypto and blockchain fundamentally allows you to fix the ills of society. And some of those are around identity. Some of those are around like social media. Well, and this is a big story that was told in 2021. It was promulgated by almost everybody in the crypto universe was that all of society is going to get reinvented by decentralized tech. And I think for people in crypto land, I think most people no longer believe this.
Yeah.
They maybe believe this in targeted ways, things like Worldcoin. I think there is a real, there's a real story there that people do find credible, although it's yet to prove itself in practice. But for a lot of these things, people just don't have the same level of credulity in crypto land as they did before. But the meme itself is so good that it's hard to be like, wait, hold on, you guys, you promised me that you were going to reinvent society.
I guess the way I would put my perspective is like slightly differently, which is that like I still, even Solana, like blockchains seem like computationally costly databases. And if I'm going to use a computationally costly database, I better get something really good out of it. And so I would like sort of flip it around the other way. Not so much that like I think the chain is going to bring utopia, but we're like, if I'm going to pay this much to use the chain, it better bring about utopia. Otherwise, why am I paying for it?
I like that.
That's sort of how I
Okay.
I think of it as, you're not paying that much, you're paying a couple cents or whatever. And a couple cents for like the security around
a couple cents of utopia.
A real financial transaction that's measured in even the hundreds of dollars. Well, that makes sense. I mean, you spend more buying a bottled water at a convenience store with a debit or credit card.
Well, I think this also gets back to this idea of like deferred value creation, which like social networks are all about, versus like upfront value, which is like finance, right? And like that's where I've never really been able to make personally this. How would you have any non-financial applications that do well?
What made you a stablecoin convert? Because I feel like that is maybe the other like the other polarizing subject where people would say, well, you use Venmo. It's just a database. Like, why don't you just we're moving dollars around? Like, but you seem very, very convinced by it.
Yeah, I would say two things. I do put stock in this idea that being able to hold dollars on your phone from any country that's powerful, right? So like, I don't know how big that market is. And I suspect that there are going to be limits within any given country, people like Argentina, whatever. I suspect that any regulator within that market, those markets over time will try to place limits to the degree to which one can move money outside of a regulated financial institution into a stablecoin. Nonetheless, that seems like a powerful idea to me. And then furthermore, just this idea that there might actually be something that blockchains or a chain could do in terms of like integrating databases in a way that will like literally from like different financial institutions, they'll like literally never happen if it had to be like an upgrade or some sort of shared. Like I find that to be fairly plausible. And so what I would actually go a little further and say like, you know, a stable coin is just the most rudimentary like tokenization of an asset, right? It's a tokenized dollar.
Agreed.
So it does not seem implausible to me completely that one could have, you know, I think there are like regulatory issues because they usually want to know who owns what, et cetera. But they're just in terms of like a database upgrade that then maybe other types of funds, you could have this sort of like common architecture for them to
You should
trade.
learn more about Superstate. We'll take that offline.
Okay, all right. But like I could, you know, like there's like part of me that's like, I'm open to that. I'm open to that idea. But then the question to my mind is still like, let's just say, you know, tokenization of certain funds or money market mutual funds or whatever, like actually were to take off. Do we know that it actually accrues to the token holders of the L1 on some level? Like it seems unproven.
Probably unlikely, honestly. I kind of think generally the more successful those are, the less the L1 can extract.
Well, so the L1 makes its money on flows, not on stocks.
Yeah,
right.
exactly.
So like, just if you just have a ton of assets sitting there, but they're very low velocity,
I mean Ethereum,
right? Right.
Ethereum,
So well,
great example.
Yeah, or you have like money markets on chain,
Yeah,
right? Like
right.
money markets on chain. Well, people are just sitting in the money market, right? Like they're
you
not
hold 'em.
constantly.
This is why,
trading.
like, I wrote a piece in like probably 2021, sort of, and I was like, I really think the winners, and so far they have in terms of actual businesses, are like the circles and the tethers. That's who like really is making a lot of actual money.
Well, tether much more so than circle. But
Yeah, no, that's
yeah.
Yeah.
Well, but so I kind of have this like black pill theory that I'm playing around with about like the real meta story about stablecoins. You know, one story is that, oh, you know, there's like this regulatory hack and blah, 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 whatever. And it'll like you implied, it will get brought into this financial domain and regulatory domain more and more over time, such that it almost becomes more demure than it is today. Today, it's like kind of like, okay, it's breaking up the boundaries of the law. And the other way you could think about it is that part of the reason why stablecoins emerged, in the same way part of the reason why Eurodollars emerged, was as a response to the overregulation of the existing system, right? And you know, in tech, a very common thing that you do is when you have a system that's like just kind of broken, right? There's all these constraints on it, and you don't really know why they're there, and it just sort of sucks. Instead of trying to fix it in place, you do like a rewrite, right? You do a second version, and you just slowly start moving traffic over to the second version. And the thing is, in politics, in law, in regulation, it's very difficult to remove things. It's very difficult. It's very difficult to look at the edifice that you have and say how long it takes to move dollars and settle them, and how expensive it is, and how hard it is to move them internationally, and all the regulation and all the sanctions and all this other stuff. Like it's hard to remove any of it, because the moment you do, you'll be accused of being a turncoat or being a North Korean sympathizer or whatever it is. But if you just create the second system and you put a bunch of gobbledygook around it that makes it extremely opaque and difficult to object to, then you can kind of just like have a second system and start over. And that second system just starts bearing more and more of the load as we realize like, oh, actually, we didn't really want all the things we were getting out of the first system, but we can explain it using a different story of why the second system is arising. And so it's like, you know, regular dollars are not treated like cash, right? But stablecoins are treated like cash in that anybody can just hold it, and like there's not this pretense that, of course, you have to proactively prove to the government that you're not committing a crime by holding this thing, right? But like with cash, that's the model. The model is that no, it's we ask, you don't have to affirmatively tell us. And the idea was like, well, maybe that was a mistake. Now you can't actually say that, right? Because then, okay, you're you know, the national security cohort is going to come after you and run you to the ground. But stablecoins are like so new and novel and shiny that it's kind of like, well, I don't know, I can't argue with this, you know? So I
actually find that very plausible and compelling.
I think in 20 years, we may look back and see like, oh, wow, stablecoins are just like eating more and more stuff. And they're becoming increasingly like adding more of the accoutrements of the old system.
I mean, it is weird, right? Because like, if I own a Tether has money in regulated institutions. Absolutely. It's just one layer removed. And so I've always had this like question of like, because you know, years ago, like I don't know, 34. Remember, like there was Liberty Reserve, which was like, and I was like, it doesn't seem that different for like this thing. Like went to prison. This guy like went to prison. I think.
Yeah, totally.
And it's like, are they? But to your point, maybe it just like it gathers its own momentum, and there is this separate set of
look at the stablecoin bill in Congress, right? So if you look at the Stable Act, which is the one that's in the Senate, for a long time, the dominant conversation in Congress was how do we ban stablecoins? Because obviously they're used for crime and terrorists and this and that and buying drugs online or whatever. And that's not the conversation anymore, right? Why did the conversation change? I think part of it is in some sense like this concession that, hey, maybe the system that we have is actually not fulfilling all of the goals, some of which are unspoken, about what the dollar system is supposed to be doing for us. And one of the things we're supposed to be doing is getting other people to use the dollar. And stablecoins, right? I was just showing a chart earlier today at the conference we were both at. Tether last year was the 7th largest buyer of treasuries.
Yeah.
It bought $33 billion of US treasuries.
Incredible.
China dumped about 50 billion, right? So stablecoins really matter now in terms of the global demand for treasuries, because every Chinese citizen who's buying a Tether while their government is dumping the equivalent of that dollar is buying back the treasury that their government is selling, right? So as a way of absorbing global demand for treasuries and basically financing the debt of the government, stablecoins are really, really powerful. And so all of a sudden, this conversation is flipped. You go to Congress, Congress is not talking about everybody who owns a Tether has to tell us who they are and prove to us that they're not committing crime, right? But that was the conversation 5 years ago. If this thing is going to exist, of course it has to get folded into the banking system. Why is that not the conversation anymore? To me, the obvious answer is that people realize this actually serves a need that we have because the existing system, nobody can actually fix it in place.
Yeah, but 5 years ago, stablecoins were also this big, and now they're
right, exactly. Which is part of the persuasion of the story.
But I also think that might be an optimistic version to think that like Congress, there's like an entity called Congress that's actually thinking this through, as opposed to a bunch of people who have become friends and gotten wine and dined by crypto industry lobbyists who are like just like and want to be on the side of the cool thing.
There was a stablecoin bill on the floor before this last election cycle.
Yeah.
And that was also bipartisan in favor of stablecoin legislation.
I mean, I hear your point that, hey, someone is feeding people in DC like some of these perspectives and these lines. And I think I would maybe like kind of appreciate that cynicism again, like 5 years ago when it's like, oh yeah, then everyone's going to have this like tokenized dollar and it's going to finance the, and it's like, okay, you're on drugs. Like, no, but now it's like empirically, it is the 7th largest buyer. And it's like, you can't deny this.
So I will say, you brought up Liberty Reserve, right? We think about the history of Liberty Reserve.
Hold on, do you want to explain first what Liberty Reserve is?
Liberty Reserve was a private cash system that was founded in the late 80s, early 90s, 90s actually. And the founder went to jail because the U.S.
It was like email sign up and you could just send money to anybody with an email.
And then people realized one of the main problems with it was like there was no cryptographic guarantees. There was sort of no permissionlessness. Like you kind of effectively had this gating thing. You could shut down the service. And that sort of arguably spawned Bitcoin in some indirect way, right? Like eCash, Chaumian eCash came out of that. Hashcash, if you read the paper, cites Liberty Reserve. So the fact that you have this permissionless sort of like substrate was almost a necessary condition, which I think had to get learned by many failures. So I would say like, yes, it's Liberty Reserve, but it had to get the path dependence of like learning, oh, you need a cryptographic thing. Oh, you need censorship resistance. Oh, you need some way of making sure that one person was not stoppable.
I guess the way I sort of resolve it in my head is like actually the decentralized money problem has been solved so long as you don't expect it to be pegged to the dollar, which is Bitcoin. So that basically like you can have the true, like more or less peer-to-peer transactions. What you can't, the only thing you don't get is you pay a volatility.
There's MakerDAO.
You pay a volatility tax.
Well, it's sort of paying a volatility.
Sure.
You pay a volatility tax. And for the most part, actually, it's been a negative tax because the price of Bitcoin has gone up. But by and large, if you want to conduct transactions, you can actually do it in a truly decentralized way. You just can't have the guarantee.
But how's that different from a stablecoin? I mean,
because the moment, well, what's different is that the moment you actually have a working, real existing stablecoin, you have to, at some point, you have to interface with the real existing regulated financial system.
The sponsors of the stablecoin does.
On some level.
As of this point, the users do not, right?
The users don't. That's right.
From the user
and they won't have to even.
But the users do sometimes because when the users engage in criminal activity, then the Tether or whatever like deletes their account. And so that is the moment where they get. That is the moment where they interact with the law.
Right.
I mean, that feels like a better system, though, right? Doesn't it? It's like you're, innocent until proven guilty versus like, hey, show me.
Well, it is private law enforcement basically, which is also a bit of an crypto anarchist dream.
I put my quarter into the radio, and you get the. You're familiar with this?
No.
What is that?
Oh, it was like this, like it's like a piece or a joke on like it was like a libertarian's dream, and it's like this fake kind of story about this like policeman who like puts his like quarter into the radio to like get a call, and then like he goes down the street, but like he didn't pay the.
And he's like,
yeah, it's
freeze, sponsored by McDonald's.
Yeah, exactly. yeah, you've read it.
I've read it.
Yes.
I've never heard that. That sounds pretty incredible.
Yeah.
Okay. Well, we wanted to briefly also touch on MicroStrategy.
Strategy. There's no micro anymore.
Yeah, it's just strategy. They rebranded. You missed that?
You missed that? Yeah,
this was like 2 months ago.
Okay, well, it is confusing when you read about it now because it's just like strategy.
Strategy.
Okay, well, I will never stop calling it MicroStrategy, but they can do their best.
I still call it like Facebook.
Hold on. Also, the ticker's still MSTR, right?
Yeah.
So like, what? No,
they changed
MicroStrategy. I'm sorry, MicroStrategy. Done.
Okay, if Saylor ever comes on the show, I'm excited.
Saylor, bring it on. If you want to rename strategy, you got to come on the show.
The podcast that I really want to hear someone do is an episode about MicroStrategy's non-Bitcoin business, like the actual. let's talk about the business intelligence.
Well, that's what we're about to discuss.
We don't talk about that
I'll give
anymore.
you the short story of MicroStrategy's business. They used to be what Palantir is. Then Palantir beat them at it, and now then they gone to.
Well,
Bitcoin.
that doesn't help me because I don't know what Palantir does. So, anyway.
But they used to do the very same defense contracting.
Got it.
Just kind of got beat out.
Okay. So MicroStrategy, there's now a number of MicroStrategy copycats. So MicroStrategy's been buying a bunch of Bitcoin, obviously, but there's now been in the emergence of these new affiliate type MicroStrategy affiliation moves of companies that are trying to do the same thing with Solana. So there's one called Soul Strategies, which I believe is trading in Canada. And then there's another one called Upexi, and there's another one, Janover, also known as DeFi Development Co. So there's a few of them now that are starting to emerge. There's a MetaPlanet, which is in Japan. So there's the MicroStrategization as a broader phenomenon that's taking place now. A little bit.
I have very strong
strategies.
opinions about this, which is you cannot do this with a fragmented liquidity base because basically the MicroStrategy game is I'm underwriting bonds against my equity. And the more of these things that they have to do it, they're fragmenting their capital base. They're not going to get the same ability to borrow.
But they're all competing to be number one, right?
They're all competing.
It's a race right now, at least for Solana.
The thing is, I think MicroStrategy was immaculate conception. They're the first one. No one else was doing it. Okay, fine. Tesla bought some Bitcoin, but there was really no one else trying to do this leverage.
Well, but
strategy.
MetaPlanet's in Japan, right? And it's like a totally different.
No. But I still think that fundamentally, the credit worthiness of these issuers is going to be, you're going to look at all of them. It's not like the lenders.
I actually disagree. I'll take the exact opposite side of this view. So here's why. So MicroStrategy, as I see it, is a structured trade, right? MicroStrategy is a company and it's using a corporate wrapper, which is a weird wrapper for what is essentially a structured Bitcoin trade. And if you're buying MicroStrategy, you're like, oh, I'm buying it at a premium because I'm not buying the Bitcoin it owns. I'm buying this weird packaging of a complex derivative, and a very exotic derivative, in which the exotic derivative is going to go out and issue debt to buy more Bitcoin. And there's some expectation of how much they're going to do in the future of this. And the value is also tied to the volatility of the asset itself. And it's like this crazy exotic self-referential thing. And I think, and think is in air quotes because like I don't have any data here, but like I think you can copy that and run the similar strategy or playbook. And it could or should work for other assets or even within the same asset. For the same reason,
do you think it work for a non-crypto asset?
That's not my claim. That's not my claim.
I was doing some research before the show, and they do have MicroStrategies for other assets. There's like a copper MicroStrategy. There's a uranium MicroStrategy.
Oh, man.
Wait, do they trade above NAV?
I don't know. I just saw that.
I think
then
they
it's
might.
not working.
To Roger's, my claim is more that if they were a single entity with the same assets of all of these, you would have a much higher premium to NAV than the ones where it's fragmented, because the problem is you have to lend to the separate entities.
When you say the same entity, do you mean like one entity
If there was
doing
only one
Sol,
Micro-
if there was sole strategy only, and like all the assets from all these were
so they
just
acquired, let's say they acquired all the
say
other
they acquired-
baby MicroStrategy.
I think then they would be able to borrow more and they'd be able to get a higher leverage ratio.
I agree with that.
And I
agree
just
with that.
don't think that. I think the fact that there's 5 of them trying to start at the same time,
But
they're
that's
actually
common.
It's like the
That's very
whole
common.
is lower than the
They're
sum of its
gonna-
parts.
Yeah, what you're
Cannibalize-
describing is like, there's returns to
I
consolidation.
think
there
they
can
might
be-
cannibalize each other for a while and then they all merge.
Look, I mean, the other thing, and I agree, the whole thing's nonsense. I mean, the whole thing, all these things seem like nonsense to me. But, it sounds a little bit like, oh, there was only Bitcoin once, and that was the Immaculate Conception, and now you can't have any more, and now there's 100,000 of them.
I agree. They're just ETFs, okay? And they're just
Well, they're definitely not ETFs.
fine.
No, but I know what you're
they're
saying.
They're absolutely not
ETF-like
ETFs.
financial products that use a
But by the way,
corporate
not financial
shell.
advice. These are not ETFs.
Okay.
Please don't buy them thinking they're
Fine.
ETFs.
They are basically exotic ETFs.
Yeah, they're corporations.
that happens to use a corporate shell.
Yeah.
Right. And you can have a lot of ETFs that all run the same strategy. You could have a lot of 3x levered Bitcoin ETFs, right? You could have 10 of them that sort of work, right? Or even for Sol. I think you can have a lot of them that succeed.
Okay, so we were talking about this before we started recording of like your deep, profound confusion with what MicroStrategy is.
I'll just say, like,
Strategy.
strategy. Look, I'll just say we recorded an episode of the Odd Lot podcast with Matt Levine, who explains these things better. And I was like, oh, yeah, that's really interesting. And then I walked out like, I still don't get it. So that's where I'm at with this. So when I saw that this was going to be on the list of like things that we we're going to talk about, I was like, I'll let you guys talk about it. I have no insight into where the value actually accrues here.
Okay, so can you try to like Eli 5, what exactly is MicroStrategy? It's an exotic derivative, but what actually am I buying?
Yeah. Okay. What you're buying is a bucket of Bitcoin.
Yeah.
Okay. And there's a bucket of Bitcoin there, and MicroStrategy borrows money to buy more Bitcoin. Right. And if you're looking at this package, you say, I can only lose 1x my money. Right. But actually, because it's in essence levered up and going to continue to lever up, I could make 5x my money, because I think that they're going to continue to borrow and buy, right? So you're not even looking at it in terms of the current package of like how much Bitcoin and how much debt is there. You're saying, well, what's it gonna do? And Saylor's on TV going nuts and talking, crazy game. And you're like, well, I think they're gonna lever this up to the moon. And so you're looking at it as this weird packaged product.
Yeah, I would also say they're able to issue these bonds at like 0 or close to 0 rates, because there are these desks that have a bond mandate that wants them.
No, it's not 0. They're convertibles, and the option value embedded in the convertible is a cost to MicroStrategy.
Sure, but
in the way that like equity options.
Sure.
Fed's got to hike rates.
That's
all. That's gotta like squash all this stuff.
Okay, all right.
So Powell will get fired if they hike rates.
I want to add one other tiny microstructure thing, which is that in pure crypto markets, almost all the types of ways to get derivative exposure like MicroStrategy have much higher liquidation risk.
Yeah.
Because you're extremely spot liquidation risk exposed.
Yeah.
MicroStrategy is like, oh, well, they're negotiating with the bank who maybe will liquidate on them or dictate the coupon. So your liquidation risk is so much lower that in some, again, not financial advice. Well,
or life advice.
But it is actually in some ways safer than the people doing the same thing on Binance or like trying to replicate.
Much safer than
right.
perps.
Yeah.
And I think that there is some truth to that discrepancy, that there's someone slightly off the risk curve from like the Binance user who's like, I want the same thing.
Well, so there's also there's this other element, which is that MicroStrategy is so big that they can move the market, and crypto prices are reflexive and autocorrelated, so that it's a very momentum-driven market. And so if you have somebody who's so big that they can themselves move the market by creating this self-fulfilling prophecy that, look, I'm going to lever up and buy more, then they sort of become like this whale. That, and for Saylor, he's getting on TV, he's proselytizing. So there's multiple elements to what makes MicroStrategy so effective at what it does. That's also difficult to replicate without having the same very like persuasive, charismatic, energetic figure at the head who's not just doing this financial engineering, but also making it so through his effect on markets directly.
Yeah, but at a certain point, it actually becomes counterproductive. Like you actually mentioned the Laffer curve at some point in this episode.
Right.
Imagine if MicroStrategy / strategy owned 100% of Bitcoin. It would be worth 0, right?
Yeah, that's right.
right? And so the value of
Yeah.
Bitcoin increases as they own less. And so there's a question of where on the curve is optimal for strategy.
Can I just say too, it's really funny to me that like conferences and even TV networks, etc., like they continue to host Michael Saylor. It's like, yeah, I get it. I know he's bullish on Bitcoin. Like I've heard that one before. Like I'm always like, and I have to say, like it's the Bitcoin specific podcasts that exist. And I'm like, how the hell are you aren't bored as hell right now with these conversations? Because I've been hearing these same things, and it's it's funny because it's the Bitcoin specific. They have nothing new. There hasn't been a new thing.
Joe, what's your seed oil consumption like?
That's what they pivot to, like talk about me.
Isn't that just like what are people talking about on like Christian podcasts? You know, like the Bible's 2,000 years old. You know,
like how it interacts. Yeah, sure. I mean, people.
There's podcasts.
It's just very funny to me.
Yeah.
There are these content makers in Bitcoin, and like they have success, but man, they haven't had a new thing to say in years.
I agree. Versus like equities, where like every single day it's so different, and there's like so much to talk about. You know,
but actually, to your Laffer curve point, I wonder if that like bleeds into the dilution. Like, there's some level of MicroStrategy dilution that basically is like they can't really borrow effectively, and that's the market.
I can't wait to find out in like
what that point is.
Oh boy,
which would be awesome. No, I actually think there's a lot to write about this. It's like a very interesting.
Yeah, you will definitely have to revisit this at some point. Hopefully
anytime.
Yeah, hopefully before the end.
But before the end.
What is the end? What does it even look like?
Yeah, I don't know what the end is.
If we get a little heads up, I'd love to be invited back on for that episode.
Here's my, this is not life advice or financial advice. This is a joke. I'm being sarcastic. This is not actually what I believe. Wank.
Wow.
Right.
Okay.
I'm cutting that out, by the way.
I think that MicroStrategy/strategy is going to get so big that it's going to become too large to fail, and it's going to fail, and it will get purchased or absorbed by the U.S. government as the United States Strategic Bitcoin Reserve.
I like this.
Wow.
In one fell swoop.
I was going to say Saylor gets hit by a bus or something, and I feel like that would also be extremely bad for the market.
But this is funny fan fiction. You guys need to like get the AI.
You know what Saylor needs to do? He needs to take one for the team and lose the keys. You know, they're just like all those coins are burned, and it's like
would the Bitcoin price go up or down?
Up. It would go up so hard.
I think
you think so?
Yeah, he needs to put the keys on a boat somewhere.
I feel like it's somehow possible the price could go down.
No, I think it's like equity holders get nothing. You wipe all that.
Yeah, in principle, in a rational market, that's true. In a rational market, that's true.
Like Satoshi. Okay, if Satoshi sent all of his Bitcoin like to a burn address, and it was like, now it's permanently burned, nothing would probably happen because everyone assumes that like those coins are gone.
Exactly.
If Saylor sent everything to Satoshi or a burn address, then you'd be like, well, there's a lot less Bitcoin than we thought there was.
Right.
And like he spent billions of dollars to build that stake. That's incredible.
I love that this is sort of like returning to the like first century AD where you like burned all your objects to take with you to the afterlife. This is like kind
like
of
an Egyptian tomb. Amazing. That would be a great way to go, actually.
Yeah.
It's like burn your Bitcoin alongside you. It's like fuck my children, fuck stockholders, fuck everybody.
Buried with like a smashed ledger.
Yeah, that's beautiful. That's beautiful.
This is what they talk about on Bitcoin podcasts.
Exactly.
Yeah.
All right. On that, we're at time. We got to wrap.
Thanks
Thank you so much
me.
for coming on the show.
A blast.
Hopefully, we can have you on again at some point when markets are melting down.
We'll all come on your show.
Yeah, we'll do it. We'll make it happen.
Amazing. All right. Well, thanks everybody. We'll be back next week.